On that note, thanks very much for joining in and speaking with us. So that is on the technicals. Canfin Homes is in focus. It posted what was a weak set of Q3 numbers with their net interest margins at a 5-quarter low. Our colleague Abhishek Kothari caught up with Amitabh Chatterjee, who's the Deputy MD and at Canfin Homes, and began by asking him about the company's cost of funds that have risen.
Incremental cost of fund was around 6.63%, and average cost of fund was around 6.25%. So it has increased because 5 times repo hike has taken place, and our lenders have passed on that hike to us. We have also increased the rate of interest, but our lending book, that price research happens once in a year. So in that timing difference is there. There is a lag effect due to which our NIM and spread has contracted.
Also, could you guide, incrementally, where are you sourcing the liabilities from? So what kind of change are you seeing in your borrowing mix?
Borrowing mix, more or less, it remains the same. Around 51% are from the nationalized banks and other private banks. And there is a NHB refinance is there to the tune of around 23%. Rest our NCDs and CPs.
One of the key factors to notice in your results this time around in the loan growth was it was at a multi-quarter low, coming in at around 20%. Now, there are factors which may have played out. One of my guess is that you are losing people due to which, AUM growth might have slowed down. Could you help us know whether losing of people has caused the AUM slowdown, or are you witnessing, sector-wise, that is the housing finance sector seeing a slowdown? What is happening that led to the slowdown in the overall growth rate on a sequential basis as well as YOY basis?
See, earlier we have given a growth of 18 to 20%. We are maintaining that, whether it is disbursement or whether it is a loan book growth. That is one thing. Another thing, the leaving of people has not impacted the growth or business continuity. And we have got sufficient manpower who are skilled and experienced to take care of the loan book growth as well as disbursement growth.
So would you see further attrition from Canfin Homes to other players?
See, attrition happens around the year. Past year also it has happened. This year also it is happening. It is a normal in the industry. We don't find it as a concern as of now.
So one question on your margins, in a rising interest rate scenario, it is disheartening to see that the net interest margin is declining over the last 2 to 3 quarters. So by when can you arrest the declining trend of net interest margin, or let's say by when can you see a pickup in your net interest margins?
I think going forward, we are going to witness a increasing net interest margin as well as spread, given the fact that most of the loan book is going to be repriced at higher rate of interest, which we have increased of late.
Any loan mix change between salaried people and non-salaried people which may help you in drive your net interest margin higher?
Not that much. As of now, we are having salaried to the extent of 74%. Rest our SCNP category is around 26%. Maybe going forward, our salary may come to 70%, SCNP may be around 30%. Beyond that, we don't see any perceptible change in going forward.
So by when can we expect the new MD and CEO announcement, for Canfin Homes?
This financial itself.
Okay. Any RBI or NHB inspection that has taken place in the recent times?
No NHB and RBI inspection has taken place in recent times.
So what kind of growth guidance would you leave us, and how do you see this growth happening from pure vanilla housing finance or the non-housing finance and between the salaried and the non-salaried segment?
See, demand is across all the sectors, whether it is salaried or SCNP. The desire to have a home ownership is still there despite rise in cost of property prices, rise in interest rate. So demand is intact. And going forward, it is going to remain intact in coming quarters also, and we will be also growing at that rate.
Any fundraising or capital raising plans that you have in this fiscal, let's say FY24?
See, already there is a enabling clause passed by our shareholders to raise 1,000 crores of fund by way of equity bond. So we are reviewing the position. If it is required, we may raise, but nothing can be sent at present.
Okay, so that's management of Canfin Homes. The stock is losing a little bit in today's trading session and is down significantly from its 52-week high of around close to 700 odd rupees. Time for a break now, but we will be connecting with another company on the other side, the management of Meghmani Fine Chem, to discuss their Q3 performance. Stay tuned.